Dear students, so today we will discuss 2018 question paper problem of Mangalore University with respect to the redemption of preference shares. In this problem, here we have to pass some general entries as well as we have to prepare the balance sheet after the redemption by considering the following adjustments. So the balance sheet given of Smart Limited as on 31st March 2018. The liabilities, they are having 6% preference shares of rupees 10 each, equity shares of 10 each, 2,70,000. Securities premium they are having, general reserve they are having, profit and loss account 75,000, as well as current liabilities. And at the same time, asset side also they given some information. Then they given some conditions. The company decided to redeem its preference shares at a premium of 10%. So the condition of redemption is at premium. Here the nominal value is 10 rupees. So on that 10% means 1 rupee premium you are paying. So when preference shares are repaid to the preference shareholders, they will get 11 rupees per share, 10 plus 1 because of the premium. Now, in order to facilitate the redemption, the following provisions are made. First one is a fresh issue of equity shares of rupees 10 each to the extent required was made at premium of 20%. So ಇಲ್ಲಿ ನಮಗೆ ಎಷ್ಟು ಹೊಸ ಈಕ್ವಿಟಿ ಶೇರ್ಸ್ ಅನ್ನು ಇಶ್ಯೂ ಮಾಡಬೇಕು ಅನ್ನುವಂಥದ್ದನ್ನು ಡೈರೆಕ್ಟ್ ಆಗಿ ಕೊಡಲಿಲ್ಲ ಅವರು, ನಾಟ್ ಗಿವನ್ ಡೈರೆಕ್ಟ್ಲಿ ಹಿಯರ್. ಸೊ ವಿ ಹ್ಯಾವ್ ಟು ಕ್ಯಾಲ್ಕುಲೇಟ್ ದಟ್. But fresh issue is made at again premium of 20%. Means 10 rupee will be the nominal value. So it is issued at 10 plus 2 rupees premium. So 12 rupees per share like that. Next condition is all the investment were sold at rupees 81,000. So here the book value of investment is given in the problem is 84,000. It's sold for 81,000. Means the sale value is less than the cost or book value. In that case, there is a loss on sale of investment. So that will be considered in the adjustment. Next one, the director wished to utilize the profit and loss account balance fully. Means 100% the profit and loss account will be utilized for redemption, and 10,000 should be left in the general reserve. Means general reserve to the extent of 10,000 you have to keep, and remaining amount you can utilize for redemption. So pass the general entries as well as show the balance sheet after the redemption. It's a very common problem with respect to the redemption of preference shares. So now before proceeding with the general entries first, so we will see that some adjustment we have to make. So some working notes is required. So first you have to see that how much profit or like a undivisible profit we can use for redemption. Means the existing profit, it may be profit and loss account, general reserve, or any kind of reserve is available for redemption, that we have to see that. And remaining amount we have to go for the fresh issue. So first calculation of the profit and loss account balance available for the redemption. First working note. So here As per the balance sheet, the profit and loss account balance given is 75,000. Now it is 75,000, we can utilize fully as per the condition. But here there is one loss. So now ಇಲ್ಲಿ investment ಅನ್ನು ಸೇಲ್ ಮಾಡುವಾಗ ನಮಗೆ ಲಾಸ್ ಆಗಿದೆ. The loss on sale on investment should be deducted. So less loss on sale of investment, 84,000 book value minus 81,000 sale value. So 3,000 if you deduct, so 72,000 is available for redemption, and this is 100% available for redemption. There is no need of keeping any balance in the profit and loss account. Second condition with respect to general reserve. So ನಮ್ಗೆ ಈಗ ಜನರಲ್ ರಿಸರ್ವ್ ಎಷ್ಟು ನಮಗೆ ಅವೈಲೇಬಲ್ ಆಗ್ತಿದೆ ರಿಡಂಪ್ಷನ್ ಗೆ, ಅದರ ಬಗ್ಗೆ ಈ ವರ್ಕಿಂಗ್ ನೋಟ್ ಅಲ್ಲಿ ನಾವು ನೋಡುವ. So as per the problem, the general reserve is 60,000, but there is one condition: amount not to utilize it for redemption, means amount to be kept in the general reserve 10,000. So the available balance for the redemption of preference shares is 50,000. So here if you see that from the existing profit or from the reserve available, so the amount available for the redemption, that will be transferred to a new reserve account, that is capital redemption reserve account. So now how much profit is available? The total amount of divisible profit available, that will be ultimately transferred to CRR. ಯಾಕಂದ್ರೆ CRR ಕ್ರಿಯೇಟ್ ಮಾಡೋ ಉದ್ದೇಶ ಅಂತಂದ್ರೆ company is having other obligations, not only redemption of preference shares. Redemption of debentures will be there, or they have to repay the bank loan, so they have to make payment to the creditors. So that's why now amount available from P&L account is 72,000, that we calculated in the first working note. Second one, amount available from reserve fund is 50,000. So the total amount available from the existing fund is 1,22,000. So to the extent of 1,22,000, we are having now sufficient funds. Now how much amount is required? So the remaining amount, as per the condition given in the problem, so there is a provision to go for fresh issue of equity shares. So in the fourth working note, we will calculate how many number of equity shares to be issued. How to calculate that? ಹೇಗೆ calculation ಮಾಡುವಂತದ್ದು? There is one formula: nominal value of the preference shares to be redeemed minus available divisible profit. So nominal value of preference share is 15,000 preference shares at rupees 10 each we have to take. So here you can't take premium and all. At face value, at nominal value you have to take. So 15,000 at 10 rupees per share. So 1,50,000 is required for redemption. So 1,50,000 ನಿಮಗೆ redemption ಗೆ ಬೇಕು ಇಲ್ಲಿ. Now amount available from the divisible profit, ಅಂದ್ರೆ existing profit ಅನ್ನು ಯೂಸ್ ಮಾಡಿದ್ರೆ ನಿಮಗೆ 1,22,000 ಯೂಸ್ ಮಾಡಬಹುದು. So for remaining amount, so these are 28,000 remaining amount, you have to go for fresh issue. So 28,000 is the nominal value of a equity share. Now if it is issued at 10 rupees per share, at nominal value only we are taking, the number of equity shares to be issued is 28,000 upon 10. So 2,800 fresh equity share to be issued. That issue is done at a premium. So that we'll see in the journal entry case. But ultimately, as per the condition given, To the extent of the remaining amount, the company can go for issuing the equity shares. Then the last working note, cash balance after redemption. So that we will see later after the passing the journal entries. So we will come to know that wherever we will get the bank account. Now, with respect to journal entries, there are main 5 to 6 journal entries as per the standard journal entry base. The first journal entry should be with respect to the loss or profit on sale of investment or maybe any assets. So in this case, investment is sold. So we will write entry for that. So bank account debit 81,000. So this is the sale value. You will receive money. So here there is a loss. So profit and loss account debit 3,000. So 3,000 is nothing but the difference between sale value and the book value. So that we did here, the previous calculation with respect to the loss 84,000 minus 81,000. So here the very important, the golden rules of accounting should be remembered. Narration being the investment sold at loss. Next one, with respect to the fresh issue of shares. So when equity shares are issued, so we will receive the money, the bank account debit. To the extent 2,800 shares are issued at premium of 20% they given. 10 ರೂಪಾಯಿ ಮೇಲೆ ನೀವು 20% ಪ್ರೀಮಿಯಂ ಹಾಕಿದ್ರೆ 2 ರೂಪಾಯಿ ಬರ್ತದೆ. So 10 plus 2, 12 per share you are issuing. So you will receive 33,600 to equity share capital account. That is a nominal value 2,800 into 10 and to equity share premium account. ಅಂದ್ರೆ securities premium ಅಂತ ಹೇಳ್ತೇವೆ ನಾವಿಲ್ಲಿ. So 2,800 into 2 rupees. So being fresh issue of shares are made at premium. Next journal entry, whenever redemption is made at premium, always that premium amount should be paid out of securities premium. You can't make general reserve or profit and loss account. So in this problem, in the balance sheet they given securities premium amount. If you go through the problem, already they are having 30,000 in the securities premium account. And at the time of redemption, the premium on redemption of preference share to be paid 15,000 into 1 rupees. That means the premium is 10% as per the condition given in the problem. Here you can see that the preference shares redeemed at premium. So number of shares are 15,000. So 15,000 into 1. So there is a premium amount should be paid to the preference shares. So that is paid out of securities premium. So journal entry will be security premium account debit to premium or redemption of preference shares. Direction you can write, being premium is paid out of securities premium account. The fourth journal entry will be with respect to the creation of CRR. So from which fund or from which source you created the CRR, for that you are giving journal entry. So debit the source Here from profit and loss account, you took 72,000, and from general reserve you took 50,000. So profit and loss account debit 72,000, reserve fund account debtor 50,000 to capital redemption reserve account 1,22,000. And last journal entry with respect to the transfer of redemption amount to the preference shareholders account. So redeemable preference share capital account debtor, nominal value you have to take here 15,000 into 10, 1,50,000. Then premium on redemption of preference shares account debtor, premium amount you have to write 15,000 into 1, 15,000. To redeemable preference shares holders account. And finally, for the final payment or for the actual payment, the last journal entry, redeemable preference share holder account debtor 1,65,000 to bank account. Means the final settlement is made with respect to the redemption of preference. So basically, the 6 journal entries always come in the journal entry part. Now last one, we have to prepare the balance sheet after the redemption. So here few things will change with respect to the equity share position, reserve, profit and loss account balance, as well as in the cash balance, the asset side. The first one with respect to the equity share capital. So here after the redemption, there is no need to write preference share capital, remember, because preference share capital is already repaid. So the equity share capital, so there will be existing 27,000 equity shares plus 2,800 shares are fresh issue. So total 29,800 shares of rupees 10 each. So the value of equity share capital is 2,98,000. Next, general reserve. For the condition we kept 10,000. It is not utilized for redemption. Next one is securities premium. So here we need little bit working note here. We can show here only. 30,000 is already available in securities premium. Plus 5,600 we got because of fresh issue. Minus 15,000. So this is 15,000 transferred to the premium on redemption of preference shares. All these things are stored already in the journal entries. Ultimately, in the securities premium account, 20,600 is available. Next, the creation of CRR to the extent of 1,22,000. And finally, the current liabilities 84,000. Coming to asset side, the asset side there will be no major change as per the given balance sheet. Only you can write if there is any sale of any asset. So no need to write such asset after the redemption. The land and building, plant, furniture, stock, debtors, there will be no change, but only change in the bank balance. For that, how we got 19,600? There is a working note. The last one we'll see here, cash balance after the redemption. Now, as per the journal entry, whenever there is a bank account debtor, means you receive money to the bank. Means there will be inflow of cash. So when there will be bank account credit, means two bank account you will write in the journal entry, means a payment part, so there will be cash outflow. So 70,000 cash at bank is given in the problem before the redemption. Now addition part, the first one when there is a sale of investment, they have to add that 81,000 You will get proceeds from the sale of investment. It will be added back to the opening or the given balance of cash at bank. Similarly, from the fresh issue, the proceeds you will get, including premium you have to write as per the journal entry. This one, bank account bank account debtor, 2,800 into 12, that is 33,600. So two figures if you add, so you will get 1,84,000. From this amount, the final settlement amount, the amount paid to the preference shareholders, 15,000 into 11. Last journal entry we passed here, sixth one, redeemable preference shareholders account debit to bank account. So 1,65,000 should be deducted, so that ultimately the closing balance or after the redemption, the position of the cash at bank. So you have 19,600. So that get right in the balance sheet after the redemption. Ultimately, the liabilities and assets should tally. So kindly go through this solution once again and subscribe my channel. Thank you.